Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, we have a special video today. We're going to be doing an update on our $100 swing trading challenge. For those of you that are new to the channel, January 1st, 2025, we decided to fund a Moomoo account with $100. The reason why is because a lot of you guys watching think you need millions of dollars to make money from trading, when in reality, all you need is a solid strategy. So we're going to be breaking down how much money we made or how much money we lost during the swing trading challenge. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading and how to find these stocks and opportunity, our entries, our exits, how to trade, the strategies, the approach, check out our school. It's fantastic. We have private live streams, quizzes, lectures, a group chat. But, more importantly, we actually teach you to trade. And you guys can get 51% off by using code TRADER, which is one of the largest sales we've done. So check it out down below. You won't regret it. And guys, let's jump into this. All right, so this past week here, we made about 2%, which might not seem like much, but hey, the thing about trading is consistency. That is the number one thing that traders need to realize, is if you guys can make 3% every single week, you are better. Every single month, actually, you are better than 95% of all traders in the entire world. So yeah, I only made like $4 this past week, but you also have to have the perspective of, if this was $1,000 account, this would have been $40. If this was a $10,000 account, this would have been $400, and so on and so on and so on. So the only thing that's separating me from making more money isn't my strategy, it's just my account size. And as I continue to trade and I start compounding this account, my profit will get larger. So let's actually turn to the computer and see the trade. All right, so the stock that we traded was ticker symbol PWP. Now, the reason why we bought in on this is because of the heavy amount of support on that 90-day moving average line, which is that blue line right here. You guys can see in the past, it hit it here and had good buying pressure. Sold off, hit it here, we had good buying pressure. Recently, sold off here, had good buying pressure. So my thought process was this: as the stock sold off and hit that 90-day moving average line, this could be a heavy amount of support for this stock. Now, you also want to look at other indicators like the RSI, which at the time was trading for about a 34. The last time it was trading for a 34 was back in here where we saw this good move. So let's go through this again. We have a stock on an upward trend. It's sold off down to that 90-day moving average line. It's undervalued on that RSI. What other parameters do we have? Well, one of the things that I do is I want to look at other time frames. One of the time frames that I look at is the hourly chart. The hourly chart here, if we remove all of these lines, we'll go ahead and draw it out why we bought in. So let's remove those. So you guys can see here that this stock had this general downward trend. So what we did is we actually threw an alert above this trend line, and so we could get notified if the stock popped up. And that's exactly what we did. As the stock popped up, we got in near and around that 23.14 area, right in this range. Now, the reason why we got in there is because my thought process was this: entering here, keeping our stop loss, so the max amount of money we're willing to lose on this trade, a little bit below the old closing or the previous day's lowest price for a possible push, right? For a possible push up to the resistance level, which is about a 4.8 risk and reward, which is really, really good. So now as the stock is continuing to climb and kind of consolidate here, we just have our stop loss right below this line at 23.30. So we have guaranteed profit if it sells off, and we're continuing to hold if we can get more buying pressure out of it. This is using something called a trailing stop loss. This is just where you continue to move the stop loss up and up and up to catch stocks that could run up higher. Now, let's go back to that risk and reward. Why it's so incredibly important to have a 4-to-1 risk and reward. So we're starting out with that $100 account. right? We're starting out with $100. Whoops, not 1,400, but $100. If we could trade a stock like this once a week, risking 3% with a 4-to-1 risk versus reward, if our win-loss is 30%, meaning we lose 70% of the trades we take at the end of the year, look at this. We've doubled our account. So if this is a $1,000 account, we've doubled. If this is a $10,000 account, we've doubled. And this is with a 70% win-loss ratio. Imagine you guys are 50-50. Okay, now you're almost at $1,000 with good risk management. That is why having good risk and reward is so incredibly important. And don't forget, guys, the broker I am using, everybody always asks, is Moomoo. They offer great charting, paper trading. They offer the tools you need to become a successful trader. So I'll put a link to them down below. You guys can get up to 20 free stock just by signing up. So I'll see you guys in there. But overall, hope you guys enjoyed today's video. Hit that like button, subscribe, check out our school code TRADER for 51% off, and we'll see you guys in the next one. Take care, everybody.